celebrating 17 years of Young Turks.
Hello and welcome to the year-end Young Turks special, where we bring you a roundup of the major news from the startup world in 2018 and also give you a glimpse into what we can expect in 2019. I'm Shireen Bhan. Now, 2018 was a marginally slower year for startup funding than 2017, with Indian startups raising a total of about $10.5 billion compared to $11 billion in 2017. Now, another point to note is that the number of deals dropped considerably compared to the previous year, indicating that fewer startups actually raised more money and in later rounds. To further illustrate this, let's take a look at the data via the stage of deals across the years. As you can see, the angel and seed round, 518 deals this year compared to 776 in 2017. But the quantum invested is higher. $437 million versus $370 million last year. But at the growth stage deals, that is Series C and beyond, we can see that the number of deals have increased dramatically, almost doubled compared to last year, but the quantum of funds raised is pretty much similar. So that's the picture between 2015 and 2018, $7.4 billion in terms of the value and 104 deals. Now, that was as far as the funding action was concerned. Let's move over and take a look at the mergers and acquisition scenario in 2018. Of course, we had the mother of all deals, the $16 billion Walmart-Flipkart deal, but beyond that, we saw 187 M&A deals compared to 123 that we saw in 2017, so all the way up to 187. The maximum activity took place in the consumer tech space, followed by enterprise application, and of course there was a pickup in M&A in the enterprise B2B space, which has been a notable trend that we've seen in the last couple of years. So there you see it, consumer tech 50, enterprise 45, retail 27, fintech 22, and food 21. That's the breakup as far as the M&A action is concerned. Let's slip into a chat with some of 2018's most active venture capitalists to understand what they make of some of these trends and also what they look forward to in the year ahead.
What stood out for you in 2018 as the most blockbuster moment or something that was a real big high?
In my opinion, I think the Walmart-Flipkart deal stands out. I think it's the biggest event of 2018, and not only 2018, I think for the entire ecosystem. You know, as we band of brothers have kind of lived through it, this probably, in my opinion, is the biggest event that has happened so far to in the ecosystem.
Would you guys all agree the biggest moment in the last 10, 15 years of what we call the startup ecosystem of India?
I think entire history is just hard to comment on. I would argue Make My Trips IPO in the US.
Yeah,
it happened as a first
in
IPO.
2011.
First IPO of a venture-backed company was a pretty seminal event too.
Okay.
But that being said, I think in the last 2-3 years at the very least, there was so much talk about, is India real? You know, is venture real in India? Are we ever going to create money, create value, give money back? I think a lot of those questions have been answered.
I think the sort of validation for a lot of large investors who were in Flipkart was very, very important for them not to lose faith on the story, right? So unfortunately, for us, there weren't too many Indian investors in it. Right. There was a lot of direct investment as well from the overseas markets.
Correct.
And their LPs were beginning to question, okay, even if Tiger and those kind of investors can't get it right, is it worth coming down into the ecosystem? Okay. So, you know, you have to think of it as what impact it has even on the venture industry's ability to capital form again, right? You know, Tiger coming back with a bang, that couldn't have been possible without a Flipkart outcome.
Seminal moment, but both the founders now out of the company.
Sure. I think in the West, we're very comfortable backing repeat entrepreneurs. Oftentimes, they've seen the movie before. I think we're now going to see, after this event, many new entrepreneurs born. Some of them are going to come over to the investing side as well. And I think that journey next time around can be more efficient, can be more productive, can lead to even bigger outcomes.
All right, all of you guys run your own funds now, right? What are the odds of you guys going to Sachin and Binny to put in money into the next funds that you all raise?
I think the odds are fairly high, and I think I would extend that from beyond Sachin and Binny. Flipkart has created several multimillionaires, many of them who are willing to give back to the ecosystem, both in terms of directly going and working with entrepreneurs, working with funds like ours, or doing something again. So I think the odds are fairly high.
Yes, and I'll change the question slightly. I agree, it's not just Sachin and Benny. I think the one thing that has changed in the last 2-3 years is that earlier just the LP asset class was limited to money from outside the country, by and large, right? I think with SEEDDEALS coming in, with some family offices, and more importantly, I think some of the entrepreneurs, even if they made little money or large money, them plowing back money back into the ecosystem in the venture asset class, I think it has significantly changed the landscape of venture in India. I mean, I think all of us are sort of living examples of that as funds.
Karthik, you're the veteran in this gang as far as running the own fund is concerned. 2018?
So firstly, you know, the Flipkart gang were investors long ago, to their credit, right? And so I'm not as singularly enthused by just them as opposed to the other stories that are beginning to play out.
Such
so for the first time to see, you know, almost like 3-4 exits in our portfolio itself of $30 to $50 million, and seeing founders even make $4-5 million each, and they'll become LPs in my fund. I'm more excited about them becoming LPs in my fund.
Okay.
I think the Bansals will go and carve out their own spaces. Too much money.
Some of the smaller exits, Karthik, talk us through them. So the one that comes to mind immediately is Minjar. Nutanix picked them up earlier.
So interestingly, if you build a business today in India, close to profitability, $4, $5, $6, $8, $10 million of revenue, the whole world's willing to acknowledge it's not trivial, right?
Okay.
So there is a price tag on it of, you know, 30, 40, $50 million. It's not small change in the larger, you know, context of what India is. In ventures context, it feels, yeah, it's a small outcome. But again, most of these were from our 2011, 12, 13 vintages. Fantastic outcomes. And then, you know, the small business IPO, yes, not enough. Some 2 or 3 of them.
E2E networks.
Yeah, but can you have like 20, 30 of them and then show a different way of monetizing and going public?
Are we actually ever going to see 20, 30, you know, IPOs of that kind or listings of that kind in India? I mean, how many years away are we from that? Very honestly.
No, just to
and
finish that question, I said recently, I was on a panel 2 days ago and I said we'll have 20, 30 large IPOs by 2025.
By 2025,
Yeah, about 40 was my guess.
Okay.
And then the small ones, I think if there's a path to demonstrating. See, it's all about demonstrating. Ek saal, if it has to run for a year, and then people wake up and say, not bad, it's run for a year, the price has held up, the guy is showing profits, he's showing transparency to the markets, let's all follow.
And E2E is holding up?
Yeah. Close to the IPO price.
Okay.
But only first set of results ever disclosed to the public.
Okay.
So the cycle has to play out, and I think the penny will drop for each of these kind of outcomes very, very quickly, because you did work for 12, 13 years and now it's beginning to show.
Okay. And before I come to you, Rahul, just the 30, 40 that you see would be what? Consumer tech companies that retail investors understand, B2B SaaS listing in India. I mean, what are the
Potentially, I mean, the lens cards of the world.
The lens cards of the world,
Things which are accelerating to profitability a little faster than where the Chinese are sinking
the consumer e-commerce verticals.
Where you're seeing unit level.
Even B2B.
And B2B will happen because, you know, the size, the scale of 100 crores, 200 crores of revenue with significant profitability is beginning to shape up.
Okay.
And you can say, oh, it took a long time, but it's okay. We paid the price of time over a decade, but now because these entrepreneurs didn't give up, they're seeing sizable businesses which can list at 1,000 crores or so.
And investors, retail and even otherwise, institutional investors understand these businesses, you think?
I think so. I think there's a huge shortfall of tech growth, high growth businesses that are available to institutional investors. There are small cap sort of managers like DSP, etc., who don't have enough tech to buy. So they're waiting to say, 1,000 crores, you get me an IPO, I will start following, tracking it and take 40, 50 crore positions.
Just to add again to, you know, on the IPO market, one of the things that I heard from a large family based out of India, which has historically been investing in public markets equities, and I distinctly remember the comment they made is that the only option we have in terms of playing in the tech space in India today is either invest in an InfoEdge or invest in a Bharat Matrimony, because those are the only public companies which exist, and I don't have an option to invest in these things. So as some of our companies which reach profitability start accessing the small cap or the mid cap markets, I think the hunger exists. They want to play in this space. They have seen the kind of growth that has happened. They've seen the economy emerging, and I think the market is ready if we can, you know, tailor these companies to go and list in the Indian markets. I think the people want to be participating in that.
Okay. Rahul, I know you want to make a point.
Yeah, two points. One, if you look at venture capital returns globally, a large portion of it is M&A, not necessarily IPOs. I think we did not have a vibrant M&A culture in India because there was a lot of, I can build it myself mindset, right? I think if you now look at the market context, we have 3 large Chinese platforms in India. We have 5 big American platforms in India. And we've got a couple of homegrown platforms like Jio that are trying to get there quickly. And we're all fighting the same battle for the next 500 million consumers. Now, if you look at the exits that are going to happen over the next 3-5 years, it's going to be in the vertical commerce area, in the on-demand services area. Some of these may become IPO'd type of events. But I would hazard a guess and say, it's too hard to build some of these businesses today. You'd much rather buy a big basket than try and make a big basket, right? So I think what we're going to see is a healthy amount of consolidation by these large players global that are not starved for balance sheet, but are now paying a premium for market access and speed.
Your impressions of what Chinese investors are now doing very actively in India, outside of Alibaba, you know, so we have the Shunvis of the world, the Xiaomis of the world, lots of others that I can't pronounce and I won't embarrass myself right now. So tell us a little bit about what you're seeing as capital coming in from that market into India.
If I look at the present, I think the talk is a little bit ahead of reality at the moment. Okay. So the actual amount of investment coming in is actually not as much as what we think is already happening, is my view. But will it happen? I think it will.
So far it's been, you know, these mini cartels of strategics.
Okay.
And I think the true validation of that in terms of Chinese financial interests, because strategics can couch this under various agendas and objectives. And if you ask me, their cost of capital is a fraction of our cost of capital, right?
Yeah.
So if you look at the aggregate dollars that Tencent and Alibaba might have put into India, it's not more than $2-3 billion. And then you add, Tencent is actually cartelized with Naspers in some sense, right? Now Meituan. Then you take Alibaba, it's of course with SoftBank, with Alipay. And then you take Shunwei and Xiaomi, they're actually working together. And so if you look at the total dollars and then compare it to their market cap, we're talking sub 1% exposure to India of their market cap. So when you put it in context, how does it matter? They can lose it all. But they're not going to lose ownership of the hottest consumer internet stories in India.
Okay.
And so they played that optionality. That doesn't necessarily mean, like Alok said, that there's a boom per se. That said, last evening for some reason I had a call at 11:45, don't ask why. As someone who also knows China fairly well, he says there's a wave coming in 19. So I think they've run out of these kind of fast-paced growth options in China. It's super competitive. It's super competitive. And what are the relative valuations for risk that you're getting in India? You can pay $10 million and get like a big, big chunk of the company here. You can't get that in China. So I think it's inevitable that they will come. They look for friends here. We should all benefit from that. And our company is always looking for more and more sources of capital. So I think it's healthy in one way. It's fearful in another because you don't know how they behave in the long term.
Right. So on that note of how they'll behave in the long term, comparisons with, you know, the crouching tiger, let's put it that way. Rahul,
so
you
I think one needs
up?
to be mindful because, you know, when one thinks about duration in China, it's 50 years, not 5 years and 10 years. And I think what we're going to see is a little bit of a cognitive dissonance between how venture capital funds think about what can get done in the next 5 to 10 years versus Chinese strategic investors who say, look, we want the next 500 million consumers. It doesn't matter if we don't make money for the next 5 years, but we want to own the market. And I think that's something we need to be mindful of because they can make those bets. Pure financial investors cannot. So I think that dynamic is something that we have to be mindful of and be conscious of the role they're going to play in going into the next million.
How do you be mindful of something like this, right? I mean, how could one have been mindful of Tiger Global 8 years back?
No, you deal with SoftBank as the pre-IPO now, an exit. Because the game changes. It's not in your control anymore.
No, I also think it means we have to rethink how we do business.
Correct.
Candidly, most of us live in India 1. We don't understand Bharat, we don't live in Bharat. The Chinese are showing up, they're putting people on the ground, they're traveling in local trains, they're observing behavior, they're going deep into the market and actually building first principles up. So I think for the venture capital industry, I think the sort of, you know, clarion call is, listen, start building bottoms up. The window of bringing from outside to in is done. We now start thinking very differently about bottoms up.
Alok?
I don't quite agree with Rahul on this one.
I
do believe that our understanding of India is far better than Chinese. I think we sometimes get too worried about what they are going to do. I also love the fact that that capital is coming. You think about it. In about 2012, if Tiger puts money in a sector, that sector is gone. Then suddenly...
But it's happening now.
But wait a minute.
Who's going to touch anything in the space in which Oyo is now that SoftBank's come in with $1 billion?
But Saina, that's why we need competition at that level of capital too. I do believe the moment you have 4 options, the game changes. If you have 10 options, the game changes again. At least there is a DST. There is, of course, Tiger. There is SoftBank slightly ahead of the game. But I think if there are a few more Chinese investors, I do think it will change the game at that level as well. We should not assume that if there is a paucity of capital at that stage, that will remain forever.
I don't think the homegrown venture ecosystem has reached that kind of a maturity where we can take enormous risks like what the Chinese are able to take, because I think we've still not reached a stage where we can put everything at stake and assume that we will keep going on and live forever, because if we lose everything, then it's the end of the game. So that risk profile is a little different.
All of us drift to about 40–50% of exposure to B2B, or driving tech that is very unique to India, or taking our tech competencies and going overseas. I don't think Chinese capital is chasing that market as yet, right? And there are enough success stories coming up in B2B, and I feel like it's inevitable that as small funds, you will have to allocate more dollars and create those opportunities for yourself. And there, by the way, $200, $300, $400 million outcomes are not a bad thing. You don't have to chase like unicorns everywhere.
And it creates specialization and you know, within the segment itself. So if you look at Silicon Valley funds have become super specialized. So I met someone from Silicon Valley today at this event who's a super specialized fund on robotics tech only, based out of Silicon Valley. So India, we are not yet there, but as more and more capital comes in from different sectors, I think all of us will have to find our niches, we'll have to stop being generalists. And as what Karthik was saying, like 40% B2B, at some point in time, some of us may even gravitate towards 100% B2B or 100% robotics fund at some point in time. Who knows?
Okay. Or drones or whatever is the flavor of the season then. All right, so let's wind this down. We started with the highs, and I'm feeling sad to close this with the lows, but yeah. Lows, let's start with you, Rahul.
I think some of the changes in policies around Aadhaar, eNash have put a bit of a damper on the fintech industry. And so it's made a lot of friction come back into the system, even though this industry, was trying to break through a lot of boundaries. And what we had was world-class infrastructure, right? So I think, unfortunately, the big challenge in India always is when regulation changes the goal on you.
Broadly, still feel things are super slow. I think every cycle, every element of value creation in the cycle, including, example I cited today, where from term sheet to getting cash in the bank on an M&A can't take 10 months. And I think it was not like anybody was acting in bad faith. That's the tragedy here, right? So I would argue we're like a 5 on 10 on that.
So Saina, I'm a little bit more optimistic.
Okay.
Yes, exits are hard, etc. But the thing is, it's no harder than it was in 2016, frankly. At least as a venture capitalist, I find we are struggling the most on the talent side.
On the talent side?
On the talent side. In many cases, we actually have no clue how to source the talent.
As what Alok says, at the end of the day, yes, it's a high friction country.
No, you're not getting away easy.
It's a high friction country. High friction country, talent is scarce. But at the end of the day, we are all optimists, and that's why we are in this job. I think we truly believe that we will hit the 3 trillion addition by 2025. And that's why we are kind of staying put and staying focused and doing our job.
Well, on that note, it is time for us to take a break. But keep watching Young Turks.
Celebrating 17 years of Young Turks.
Welcome back. You're watching our year-end Young Turks special. Remember, this was also the year that Young Turks finished 17 years. Now, over the last year, we featured almost 200 startups on the show, and we've drawn up a list of 10 early-stage ventures. We believe that these are the ones that you should watch out for in 2019. Let's take a look. Well, congratulations to all the startups that have made it to the list. Here's wishing you all the very best. With that, it is also time for us to wrap up Young Turks for 2018. As always, it's been a pleasure bringing you stories of enterprising young entrepreneurs. Keep watching the show. Send us your feedback. We always like to hear from you. And may 2019 be an even better, more enterprising year. From all of us here, goodbye and many thanks for watching.